9:35 a.m. Pacific Standard Time. Date 2/23/2014. So what do we have before us right now is that we have Netflix on a daily chart. And Netflix is at a major wall of resistance up here. That's the 10-day simple moving average, and the 20-day is down here now. So when Netflix posted their quarterly results, they got the gap up to here. I'm going to draw a trend line where that lower end of the gap was. It's right about there. And then we consolidated 3, 5, 6, 7 days, narrow range with a gap up. And now we are consolidating once again 1, 2, 3, 4, 5, 6, 7 days. And we have not taken out that major resistance level on Netflix. So basically what we're going to do is look at these put options right here, and this is a March 435 put. It's 1 month going out in the time. They're very narrow range traded. The high was 1815, the low was 1520, and the previous day's close was 1660, and we can clearly see that the range was 2.95. I have before us a 435 put chart, and we know that the public has ever seen a call or put chart, but they sure love to trade options, don't they? So one of the things that we're going to say very clearly is that the 435 put, where Netflix has that major wall of resistance, is a key factor. Now, when we take a look at the 420 put, which is below the market, these put options are very deflated, because they are. And what I am going to tell our other crew in Chicago there is that this is where the put side of the market was. Now it's at all-time lows, and that's a 420 put below the market on a calendar what? Regular monthly, March 14th, regular Monday. Now, for intraday trade, we can do this. We can take a look at a weekly, and I will. That 435 is right here on the weekly chart. However, this particular put is totally differently priced, and we would not trade this one on the weekly because, number one, they were written to take people's money. So we just wanted to take a look and see what some of these weeklies did look like. Here's a 420 weekly. Remember, starting tomorrow on 2/24, and they expire the following coming up Friday. So when we take a look at another weekly, March 14th week, we're going to take a look at the 435. We're going to take a look at a 432 in the middle. That's 1480. And here's that 1435 versus the monthly. We are not going to trade these weekly contracts. However, because the prices are rigged, we will stick with the March regular 14. Now, having said that, we're going to take a look at the $400 put. That is well below the market on Netflix. We already know by looking at the chart on Netflix that it's had a tremendous bull run. And we can see, though, that Netflix is overbought in a short time frame. And it is. And one thing, if we break that 10-day moving average, the 20-day simple is at $416 now. That's the red daily moving average there now. Now, this $400 put below the market is getting very, very cheap for a premium trade, and was very, very important to look at it. So we're going to take a look at the 420 again. The 420 March 14th regular put. This is where these are going to getting extremely deflated. I'm going to show what the range was on that 420 right here. What we'll be doing is, this is the 420 put on Netflix. It only had a $1.56 range. So we're going to look at where we could get these entries on the 420. However, we would be looking, if Netflix gaps up tomorrow morning, They're going to gap these prices down. We will deal with this on the opening bell, but we would like to see these come down to about 650 by 690 if Netflix will gap up and make another high tomorrow morning. And here we are right there. So we're looking at the 420 put. Why are we looking at the 420 put? Because that is the value of the 20-day simple moving average, the red line. Okay? And once again, this put option is that 420 put below the market. Now it just becomes a entry on this. Okay? Because if we bust below that 10-day, then we're going to short it, the shares aggressively. Okay? And we're going to be buying the 420 puts very, very aggressively. So, once again, I'm going to recap this trade. There's the highs. We're going to take a look at our other system. 20-day simple moving average. This is that support level down there. If he gaps down below this trend line right here and comes down, we would look at going long at the 20-day, but we would short it ahead of time, then flip the short back to a long right there at that 420 area where the 20-day simple moving average is.